Hello, Maverick traders. Welcome out to your market roundup, November 6th. Corey here with you. Let's jump in. As always, we're going to look at the markets and what meaningful news is out there. There's some important earnings results that have come through. We'll talk about that. We're going to look at the broader markets, what sectors. We've been highlighting a few different sectors of late. We had a neutral outlook on energy until a couple of weeks ago, and now I think, as I talked about last week, energy down, very good for equities. And one of the better trading calls I've made, calling for equities to have a big rally. And they had a huge rally, their best rally of the year in the past week. And then we'll always highlight the next best opportunities for making money.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at the markets, some interesting things here in what was a relatively quiet day. First of all, Dow, S&P, NASDAQ all flat. Russell 2000, which is small caps, down 1%. Oil up a little, gold down a little. So not a whole lot of movement there, but why is this interesting? Well, if you would look at the daily news, Berkshire Hathaway reported a 40% increase in operating earnings. In other words, their businesses came back year over year in a big way. The stock itself, though, traded down sharply on this news. So this is a case where a lot was priced in last week. I mean, we had it as one of our bullish stocks. The stock was at 337, traded in a straight line up into the 350s. Certainly, you want to take profits going into the weekend, going into that earnings report. And so just kind of a give back. I don't think it's the end of the world for Berkshire and that it's going to go down dramatically, but basically it priced in a lot of that. The good news came out. They took profits this morning when the stock opened. GPT-4 Turbo is now introduced. Now this is backed, of course, ChatGPT is acquired, at least a huge stake in it was acquired by Microsoft, and now their latest innovation, what they say is kind of a game changer for AI, is now being introduced. So for those of you that have been utilizing AI, this is a new iteration of that, and we're just going to see more and more of that. If you're playing the AI space, Microsoft with their ChatGPT ownership is certainly one of the plays. Advanced decline line, 65%, or about 2/3 of stocks going down today, and the 50-period moving average improved dramatically last week. We called for a big rally. I thought that, I really called the market perfect with this false breakdown thesis, and it played out. One of the best calls I've made this year, certainly in the best week for the markets last week in 2023. Now, let's look at markets a little more closely. Here's what we talked about exactly 1 week ago. So I do these on Mondays, and I talked about, we were right here, and I talked about this little false breakdown. Now, I had a longer term chart, but basically we had pierced a little level of support, and as I had laid out in my thesis, I was expecting a little break below support, and this is that fake out move where it triggers stop losses. It causes people to say, hey, support didn't hold, let's panic, let's sell. And so you get this flush below support. Anyone that's willing to sell is triggered and out of the position. They run, they say too much pain, whatever, and they get flushed out, and then the market reverses hard. And that's exactly what we saw. And it's a bear trap. Anyone that acted bearishly, that sold, that took off trades, they regretted it just a couple of days later. And now anyone that shorted the market on that move, etc., they're in a trapped position. And what does the market do? It punishes them with a rip your face off rally. Now, I can't say that I predicted this big of a rally in 1 week, that I thought it would go up this much. Well, I thought we could certainly see a rally up into the zone, and we highlighted the downtrend line, some of these levels, and we're not even quite there yet. So if you're forecasting out where this market might go, there's just a little bit more upside. You'll see the same thing in the NASDAQ, this downtrend line, a projection that we could trade up towards that, and we're basically closing in on that level already on the NASDAQ. So the NASDAQ has reached that zone. The S&P has just a little bit more to go, but that's basically it. That's the rally that I anticipated, this little false move. You can watch last week's recording again to kind of go through what our thesis was back then and what we anticipated. Well, now we've got to push back up to the top end of the range. If you look at this, this is really a channel. You have the top end of the range and the bottom end of the range. Well, where do you want to be more bearish? Certainly more towards the upper end of the trading range. Where do you want to take profits on your bearish trades, level things off, maybe even get bullish, but certainly even up your positions more towards the bottom end of the range would be logical, right? We get stretched away from the moving averages, all the things we talked about last week. And now we've come back to a point of importance. Do we fail here or do we break out here? Now, I'll give you my 2 cents on that. Here's what I would expect. First, a little bit of a reversal. Kind of get people saying, oh, it couldn't hold, here we go again type of thing. And then I think we come up and we pierce that level, and that will be telling. We could break out and we could certainly continue to see a nice rally into year end. If you're just looking at it from a seasonality perspective, I would bet on the upside. And I sort of think that that's right. I think that we're probably going to have more of a push. I think the seasonality is strong. I think inflation numbers, some of those things go back to the sidelines and are not as big a concern into the year end. So would I anticipate that we still travel to a little higher prices? Yes, I would. Would I look at the dips as maybe an opportunity to buy and think that they're probably going to establish a higher low here that we're going to bounce off of and such? I would look at it that way. That's my opinion. That's my perspective. So yes, we've rallied a lot. You probably don't want to be chasing too much here at the top end of the range, but you get a little pullback back into these moving averages, back into this 20 period MA that's starting to curl up, and that's probably the next spot to add back in on the long side. Now, the heat map, mixed picture. My least favorite sector was one of my favorite sectors for a long time, but I do not like the setup for energy. I went neutral on energy a month or so ago, which was a good call. I thought we'd see some volatility, and we talked about this last week. Energy looks terrible, and what's bad for energy is good for the rest of the market. If you see oil prices back up, if you see energy prices fall and energy companies, they're a small portion of the S&P 500. In fact, one apple is more important than the entire energy sector from a market cap perspective. So the energy struggling is actually good for everything else, but it's not looking great. And I have to add to that list, I don't like how materials look right here. Now, again, materials are a smaller segment of the market, but within materials, you have things like gold mining companies, steel, aluminum, copper, a lot of these basic materials. And I've been bullish on gold and some of those things for a few weeks, and they ramped higher. I take that position off. I actually think they're more of a short here than a long. So I think people got a little too optimistic. I don't think it's done long term, but right here, right now, is a trading call. I would be much more inclined to looking at shorting some of the gold mining stocks, shorting GDX, shorting GLD, shorting NEM, which is Newmont Mining, or GOLD, which is Barrick Gold, and so forth. I would be looking at those more on the short side. Now, as we look at different ideas here, we'll highlight some bulls and some bears. I don't really have anything that stands out as a big screaming neutral right here, but let's look at what stands out as being a little bit better, a little bit worse. Now, on the bull side, I have some conservative picks here, international markets. that's a snooze fest. They're not going to be high flyers. They're not going to move very quickly, but probably something that continues to outperform in the short term. On the bearish side, we got a mixed bag. So let's look at a couple of names. Here's CME Group. Now, this is in the financial sector, but it's really about trading activity. And as volatility increases in commodities and these tradable assets, it's just more revenue, more growth for CME, which continues to grow. They're not hurt by the banking situation, all of these things, as much as like a regional bank is. They trade differently and they act differently, and they're on top of support. They've been bouncing around here. Today could be an important day. Notice how it reversed what was an ugly period on Friday and look poised to move up and out from here. So I kind of look at this. I think we've wedged right here. We've consolidated, call it a flag pattern, whatever you want. I suspect this is going to move up and out from here. So possible trade ideas. I mean, you could trade when looking at profit and loss and opportunities. We always talk about risk graphs. Well, you could put on something that's a bullish risk graph, basically a bull call or a bull put debit, bull put credit or a bull call debit spread. Either one gets you a risk graph like this. If the stock price goes up, you get to max profit, and I'd be targeting something up here in the 220 range, something like that as a possible short-term trade. Now, another bullish idea is the Japanese index. I liked this a while back, and I've gone away from it for the past few months, and now I'm back in thinking that this is going to outperform again. So I think there's probably a little more pullback here, but I am looking and considering a buy the dip scenario. Might pull back, even allowing this 20 to catch up might surprise you as it pulls back a couple more days, but I'm in buy the dip mode in Japan. On the bearish side, energy. We talked about this last week. I think this sector is going to underperform for a while. I don't like how they're trading. You look at something like Chevron, it broke support, it plunged. Now it tried to bounce. The bounce was lackluster compared to almost everything else. Probably going to still test lower prices. Also on the bearish side, I've got Target, a retail, big bearish engulfing formation today. Almost the opposite of CME in that, again, it's a wedge type of pattern, a flag pattern. But in this case, where you come from is very important. CME was in a big uptrend and then consolidated. Target in a huge downtrend and then consolidating. And the fact that it's right here and reversing hard, I suspect, gives us information that this is going to continue down. And there's a psychological number down there. See that $100 price point? Psychologically, it seems like that's a magnet, kind of a magnetic pull to see if Target might trade down to 100 and whether 100 can hold when we get there. I think you could trade. So speaking of risk graphs, you could put on some sort of bearish position. Here's your break-even line. You would put on a trade that basically would be profitable up here if the stock falls, and unprofitable if the stock rises in price, right? So maybe your strikes are something like 110 and 100. If it gets to 100, you're at max profit. If it's above 110, you're at max loss. Something along those lines makes sense to me. Now, market seasonality is bullish. Precious metals, commodities, they just look tired, look ready for further declines to my eye. Fed Chair Powell is going to speak on Wednesday and on Thursday and certainly can move the markets. I don't know that there's anything big planned there, but something that will need to be watched and can create volatility as the market dissects what he has to say. Disney, Gilead, Occidental, Suncor, and Trade Desk, and Uber, and a variety of companies reporting this week, but it is starting to slow down. We've gone through a vast majority of earnings reports, so now we're getting into a little bit of a slowdown as far as quantity of companies and impact on the markets. We've gone through the heart of earnings season. Now we're getting towards the back end of it. Hope you've enjoyed today's market roundup. Have a great rest of your day and a great week ahead. We'll see you next time.